But go on, and then I, of course, can give an overview and answer others' questions as well. But please, Josh, ask away.
Yeah, so I was just wondering, as far as the cost, I know there's two specific costs as far as to the user. One is if they find it themselves, and the other one is, of course, if they go through us. I didn't really understand like the tokening system or pre-purchasing some of that stuff before. And then I didn't really want to pay for it before, especially if they choose to go somewhere else. But I suppose the best way, and I don't know if this is what other users of your program do, they, send out the link, they end up paying for it themselves, and you just roll it to the cost of the loan at the end, as far as fees and stuff, and just to reimburse them for that cost.
Yeah, we're going to go over. Yeah, I'm going to go over. I'm definitely going to go over that with the visual as well. So I appreciate you asking. So I know that's a question, and I will try. And I'm not going to like drag out with huge amounts of like presentation or anything like that. I can go dive straight into the demo. But do you mind if I get an overview of all the other types of questions so I know like where to focus as I answer? Is that okay?
Sure. And then just some of the costs, because even I know there was a 45-day free trial when you initially sign up. And then, okay, so what is it going to be after those 45 days are up?
Okay, so there's always a free, you can always invite people and use the estimator completely for free. Okay. And so I'm going to go over post 45 visually. So I'm going to answer those exact questions, and it will be answered in the next, as soon as I get started, within 5 minutes. But let me just go over Daniel, Melissa, Chaston, and Jamie. Do you all have any other questions you would like me to focus on as well? I know costs, how to invite, how to balance the cost, how do people do it? We will certainly cover that.
No, I'm sure you're going to cover anything that I'd need to know. And if I have a question, I'll ask you at the end.
Okay, perfect. All right. Daniel and Melissa, hello. Do you all have any specific things you'd like to make sure we cover?
I'm right there with him. I'm sure he'll cover it. And as things come up, I'm sure I will have further questions. Okay,
perfect. All right. So I'm going to share my screen. I'm going to share the entire thing. So you're going to see all the tabs open on my computer, but that's because it'll make it easier for me to navigate. Really quickly, before I go in, I'm assuming you all have signed up. Tell me yay or nay, because I cannot see your faces at the moment since I'm screen sharing here. You all have signed up for the lender dashboard already.
Yes.
Okay, perfect. So just making sure to level set there. Some people get on these calls and have not. So I just want to level set right there. That means that you all have now generated your own links and ability to invite people to LoanSense, which is perfect. And really quickly, how LoanSense, how we came to the conclusion that we need to do this in the lending sphere for student loan borrowers, by the way, is because we did analyses for the top largest lenders, and they're declining 300 million plus student loan borrowers due to DTI issues, and loan officers, you all are on the ground level speaking to these individuals, and we can catch loan savings very early on in the process with our product. So that's why it's really important. And I myself, the founder of the company, has been declined for my first mortgage as well in 2015. And I was told by the LO, pay down your student loan debt and come back later. And I thought, how many years am I going to have to eat ramen? And how much will this house be worth in 5 years? And I found the Fannie and Freddie guidelines that said I can restructure my student debt into an income-driven repayment program. And I was able to close in 2 months, less than 2 months. And we can do it in 21 days or less. So that's what we're going to help your borrowers achieve. So now that I went over that, I want to show you this dashboard. On your dashboard, you don't see this data yet because you get it once you invite a consumer, right? Once you invite a consumer into the dashboard, we will show you where they are with the LoanSense process. They can meet with an advisor. Some choose not to. Some just file the paperwork. And we will update you on what we will take the estimated payment from the calculator into actuals right here on the dashboard for each client that you invite. And that's the data you get back. That's part of the 45-day trial. You can always, and this is part of your question, Josh, about what are the cost differences? How do we manage the cost? Let me go over that right now. First and foremost, you can always invite a client without putting in any numbers, or you can put it in numbers and do the preliminary analysis, right? I'm just going to go over this really briefly to get an example. Does anybody have an example they want to use, or should I just make one up? I'm happy to do live scenarios as well. I'll just make one up. Okay. Okay.
Okay, I have one.
Okay, perfect. I love participation.
Yeah, I was playing around with this the other day, and I wanted to make sure that I had all my numbers in the right places and everything. But of course, I went from your lists to try to figure out exactly which ones are federal loan servicers and which are not. And I emailed one question, and they said, "Okay, yeah, this person is too." So it was okay, Oklahoma, something like that. But
okay, so first and foremost, let me answer your first question. If you go under tools and you go under product guide, you're going to see most frequently asked questions. And I recommend everyone pulling up the most frequently asked questions under the product guide, because these are the most frequently asked questions by consumers. And this includes all the federal student loan servicers.
I had one that wasn't on that list.
Okay. And yours was, I'm sorry, what did you say again? Oklahoma what?
I have to go back in my loan hub and actually find it. But it's
okay. So it's possible that that is a private Perkins loan or a private like FFEL loan. There's specific private servicers that can be consolidated and made public. But if they're not on this list, most likely they're just small little credit union like servicers of private loans. But here's the good news real quick that I want to show you, not to overwhelm you, is once you do invite a client, right, and you do this estimation, what you are providing, the numbers you get out after we enter here is an estimation. Once you invite the client, they come into our platform, they get actuals. And you're going to get those numbers of actuals for the consumer in your data feedback here. So when you click on their name, this amount you see is what the person is, it's estimated right now, because until they file, you're going to get an actual. Once you get an actual, this number is like $5 to $10 off. So the good news is when you come in and you're nervous about what numbers to input, just know that what you're providing to the consumer is an estimation until they come into our product. So don't worry if you're not 100% sure on every single number. Of course, you want to get as accurate as possible. I understand that. So, did you want to go through that scenario, or should I? Okay. Perfect.
Yeah, and the name of the servicer was OK. Stands for Oklahoma Student Loan Author.
Author. Huh.
Arthur. Yeah.
Arthur.
OK. Yeah. OK. Student Loan Arthur.
Okay.
Author. I'm saying it wrong. Author.
That does not like if our FAQs here, these are the large federal servicers. That does not sound. What's that loan balance?
They had loans from all sorts of student places, but the total balance was $108,399. So
okay.
108,400.
Okay. Is that the only student loan they have?
No, there was literally like 15 of them.
Okay. So yeah.
I just put together in one big lump sum.
Oh yeah. One big lump sum. Okay. So really quickly, private loans go into the other loan category based on a monthly payment, because their calculation is based on the monthly payment, right? So for the purposes of your example, I'm going to use 108 as federal. I'm not saying we should do this all the time. I'm convinced that once they come in and they connect to this loan, we're going to know if it could be consolidated and made into a direct public loan, because we can do that with Perkins loans and we could do that with FFEL loans. So any loan originated before 2014 that was privately serviced, but that was underwritten by the government can still be put into what's called an income-driven repayment program. But we're not going to know that until they come in, right? So if it's not on this major list, though, I would most likely assume it's private, unless in your scenario, it's a really huge balance. And most private student loan providers do not actually lend out this amount of money. It's usually the federal government. That's why I feel pretty safe about putting it here and counting it as a Perkins loans, right? What amount of money does this person earn?
Well, they're married. Their combined income is 94,000.
Okay. So here's another thing. We could possibly file their student loans to not include their spouse's income, which will lower the payment even more. But that's a pro tip you don't need to know. You may not need to know. You can know it, but you don't have to process it here, right? If you don't know what their actual payment is, sorry, I clicked something. If you don't know what their actual payment is, because is their payments in zero on their credit score, Josh?
Yes.
Okay, that likely means that it's actually a federal service loan, or they may just not be paying on it. So let's assume interest rate is 6 because that's the average, and their family size.
It's just the two of them.
Okay, so what we do is really quickly estimate, okay, before and after, what the government estimates that they can afford up against the fully amortized amount, how much that will boost affordability, right? So now this goes to your additional question, the payment decision. You'll enter the primary person who's holding the majority of the debt. If they're married, invited here. They both have significant debt. You should invite both of them to get started. And then you make the payment decision. So if you want them to pay, which is fine and great, you just click no, they're going to pay for themselves, and you go ahead and send the invite after you enter their info. Some loan officers, we only put this option here because some loan officers are like, I screwed up. I told them 0.5%. Now we're going to use Fannie 1%. I feel bad. I'm going to go ahead and pay. Or this person now has sent me 2 of their friends who are doing mortgages with me. I'm just going to go ahead and pay for the service. Like, your client best. If you're 2-3 weeks into the process and they're committed to you, then you can make a payment decision however you feel comfortable. We don't dictate it. We don't mandate it. So how it works is if you put no, they're going to pay, then they just pay us after they get their student loan plan within our software. If you say you're going to pay, then we just invoice you for the people you say you're going to pay. Does that make sense? That's it.
Yes.
That's how it works. And of course, some people are like, well, I'm never going to pay. Okay, that's fine. We'll just click this. We're not going to argue. You can choose whatever method you want best, right? But we put them both here because some loan officers use this and some use that. But yes, there are loan officers that give the 249 credit at close. Again, that's also a personal decision. And of course, we have relationships with entire brands where all their loan officers credit at close, right? And we have entire brands who they'll buy enrollment credits based on loans that they would otherwise lose. So it's completely a loan officer. And then once you have success and we talk to your leaders and engage you all as a brand, then it could be a lender holistic decision, right? So essentially, if you click this, we send you an invoice. If you click this, we just bill the client in their own dashboard after they get a full analysis. So we never ask anybody to pay us if they don't take an action to actually enroll and get a DTI reduction and get help. If they just get an estimate and don't move forward, we don't charge them. So we're essentially giving them free education. So the worst that can happen is they get a free analysis. 2 out of 3 borrowers that come through our platform will be able to get a reduction. And so we would not want those 1/3 of people to pay us if they can't get a reduction, right? So that's the philosophy of how we operate. And you go ahead and click invite after you enter their information. Any questions about this portion?
So when you become like a brand, like let's say Guild enrolled in this, so does that kind of change the way they pay, or sometimes like your specific brands just like foot the bill? It just depends on the company, I suppose.
Yeah, so it depends on the company. Some brands will say we're only going to use this for the repath team loans we're at risk of losing. Some brands are saying give all our loan officers access to all the data, and then they just pay for the premium version of this for every LO. So now, like when you invite consumers in, you don't have to worry about having a trial period. You'll see all the data, including, by the way, you get a lead capture link. So if you look at the lead capture link, it's copied to the clipboard and you open it. Some brands will co-create, for example, Prime Lending made over 100 co-branded assets with LoanSense, and they put the Prime Lending, Prime Lending on the consumer link. So every consumer who came through, this and went straight to sign up, they could say, yes, I want to be introduced. It acted as a lead capture, right?
Oh,
So this you could put on your email, your website, you could put on your social media if you want people to start understanding their balance. They could put even if they say no, they don't want to speak to somebody and they sign up, the information will still get populated right here on your dashboard. By the way, you'll still get, even if you've never spoken to them, like let's say you've never spoken to Ivan, but he came through your consumer product, you'll see his info right here. Like Ivan, who you've never spoken to, email, phone number, signed up. You know, we won't ding you an email if they say they don't want to speak, because if they say they will, we ding you an email as well. They say no, we don't ding you an email, but their information will still show up here. So this is part of the 45-day free trial. And after that, this is the only thing that becomes not visible. So if you want to like follow up with your consumers you send, you can still get the data we provide back from the consumer. You can always invite people for free, right? That's always part of it. We never charge anyone to invite a consumer or to understand the potential impact of adjusting their student loan. We never stop a loan officer from doing that. And we also never stop a loan officer from providing the lead for getting the lead capture as well. Does that make sense? I also want to highlight, like in this marketing and training program, this is also part of the premium that I think Melissa asked for access to. So I'm going to have at the end of the program how to get free access to this as well. But basically, we have all kinds of loan officer training content here, also direct to consumer webinar content. We have all kinds of social media ad copy, social media assets, email templates, and of course, like information on how student debt impacts DTI, like for the consumer and chapters that can be addressed and accessed. That's there. That this is generally part of the training. I mean, part of premium, but at the end of this, we will announce, and we will officially announce the referral program soon, where you can invite loan officers and get access to our training and marketing materials for free as well. So I will be talking about that in a second, but I just want to make sure before, are there any questions about how to invite, about the payment? Because I know that was kind of the biggest questions to start with.
no.
No? Okay, cool. I'm happy to also talk about, okay, let me talk real quick about what's coming up on the referral program. And then I'm happy to talk about like any questions about student loan programs or even like scenarios on how we've helped people, how we've worked hand in hand with loan officers to help borrowers get to closing. Happy to talk about some of those scenarios as well. But really quickly, let me go back to, I know I never pulled up this presentation, but I mentioned the referral program coming soon. The reason that's important is because that will give you access to our training program when you send 3 other loan officers. And we also give a certification at the end of our training program that gets loan officers. We obviously want to educate the market as much as possible. And we give loan officers a student loan lender certification and an emblem that can be used and posted. We are about to announce it soon, so it's not all complete. I'm really excited about that. As we kind of uptick the number of loan officers signing up, super excited about that. And of course, just like Josh, you happened to mention, if you want us to engage with enterprise level leaders to get it potentially in your organization, we're happy to do that as well. I will open up for some questions.
Kind of going back to the cost again. So to continue like the access, I suppose, to the loan officer portion after 45 days, I'm just not really clear on what that is.
I'm sorry, you're not clear on what? On premium?
No. The cost of the loan officer specific page and access to the trainings and stuff like that after the 45-day trial is up. What is that amount?
Oh, I'm sorry. I thought I clicked on it to show you, but you're right. Okay, so basically settings and billing. So to upgrade to premium for the year, excuse me, I have a slight cough. Sorry about that. To upgrade to premium for the year, it's $397, which is $33 a month, the price of a dinner or a gas station cup of coffee a day. So that's it. It's $397 for the year. So let's say you're done with use it for free, start to get results, of course. And there's options. You can either refer 3 loan officers, which will essentially give you access to the training program and access to the data, or introduce us to enterprise leaders who would potentially license it depending on the brand, or it's $397 a year to access the training and have continued access to the data. But in the meantime, invite people and see the value of the data. We love to have people do that. So I'm sorry. Yes, it's $397 annually post the 45-day free trial.
And did you say that the referral thing that's in the works, or are you doing that already?
The referral thing, the reason I say it's in the works is because we're about to publish a link in a way for loan officers for us to easily track the number of referrals. The reason I say it's in the works is the program details aren't in the works. It's being able to tech enable giving you a link. So if you send 3 people, we know 3 loan officers signed up because of you, and then we just turn on premium. Because if we just do it right now without that fully hashed out, then we're going to have to be manually tracking. You're emailing us, hey, I sent 3 people. Why isn't my premium turned on? Things like that. So we just want to avoid customer service backlog. So, but we will be getting that out soon. So you will get information on that before your 45-day trial is up. So you could essentially execute on the actions and get access to it. But I did want to bring it up in this call since I have a few loan officers here about it, even though it's not 100% ready to the links aren't ready to be given to you today, but I just did want to mention a little bit about it. Does that make sense?
Sounds good.
Cool. Anybody else? Thank you so much, Joshua. So as part of premium, the training, the data, and mortgage coach data integration. So if you want to create LoanSense rent versus own within mortgage coach, that will be available as well. But do not, that's why I almost don't even bring up premium, because you can get so much value before that. So
Totally. I was expecting it to be a lot more. So yeah.
Well, I mean, we also do, yeah, absolutely. I hear that. I hear that too. But honestly, let me tell you something, Joshua. Our goal is to get to Guild and get Guild to automate this data in your ahead of decline or you having to enter anything. My goal is to get Guild to automate the data for every loan officer. That's my ultimate goal. It's not to get you to pay me money. It's to get Guild to automate the data for every LO. That's my ultimate goal.
So how do you go about making that happen?
You get really good results and we go share them. And you get really good results. We share them. You become LoanSense certified. And we then sign Guild up with the GSAs one of the GSEs to launch LoanSense data, and Guild can be one of the first brands. One of the first brands to get access to automated data in the underwriting system. So we want to create change. We want student loans to systematically be accounted for and an adjustment be accounted before the GSEs deny the underwriting decision that lenders are submitting into LPA and the desktop underwriting systems. That's my goal. You guys can help me get there and change the outcome for every borrower. But we have to start by loan officer education and loan officer just getting results, right? Because we know we can get results. We just need to get the market educated and sending people. And then we will get there on the technology side. Not because of us, but because the mortgage industry moves slowly. So we have to slowly engage one person at a time, you know?
Interesting. I think it's a big deal that y'all integrate with Mortgage Coach, though.
Well, thank you. Yeah, I don't even barely talk about it that much.
I think that's
because
kind
we
of
do
probably
try
one
to
of your
do it.
biggest selling points, really.
Oh
Mortgage coach
yeah.
is a big deal.
Oh yeah. Absolutely. I love Dave Savage. Yeah, absolutely. They're amazing. Yeah, they're amazing partners. They're just also going through like a big change themselves. And they have a lot going on. And so yeah, it's yeah, one step at a time, you know?
Because we have access to mortgage coach. Of course, for us, there's a discounted rate and stuff like that every month for it. So imagine, even, you know, you could definitely build off that somehow. You just have to have some people get results with it.
Oh yeah. We have tons of people getting results. I just want now I'm talking about Guild. I want loan officers from Guild, you know? And oh yeah, we have tons of really positive, amazing results from a lot of different brands. But you know, like every major brand, they want their own results. Mhm. You know, to roll something out. So yeah, Daniel and Melissa, any other questions? Otherwise, I mean, I love answering and talking to Josh. I just don't want to make sure we're not excluding the others on this call.
Yeah, I am kind of curious. So, do you have training on how this pairs with Mortgage Coach?
Oh, yes, yes. We have an entire product guide, and we not just have a product guide, but we generally do with Mortgage Coach. It's generally a brand level training. So if your brand, for example, you're like, hey, I'm using LoanSense, I want to have get my results in Mortgage Coach to provide analysis on rent versus own on their links. Um, we generally do brand specific education with Mortgage Coach AEs. They will do a training with your execs, and the execs will roll out a training with the rest of the company. It's generally like a enterprise level training, but if you're interested in that, I can tell the Mortgage Coach AEs you're interested in that, and we can get that set up.
No, I think I was good. I was just curious how integrated you guys were, but that answers that. So, thank you.
Yeah, we're integrated. Like right now, today, we're technologically integrated. You can get your result from our product into Mortgage Coach. And you know, the rent versus own, the TCAs are automatically generated in Mortgage Coach. That is today. The next version, we will have our product inside of Mortgage Coach. Right now, you access our product and it generates TCAs into Mortgage Coach. And yeah, so it's already integrated. We're integrated. So if you're interested, I can flag you all for a training with the Mortgage Coach AEs.
Sure.
What Daniel? What brand are you with, by the way?
I'm with Element Home Loans, but we're a division of NFM.
NFM. Oh, NFM. Okay, cool. Yeah, that's a really big brand that uses Mortgage Coach a lot too. I know.
Mm-hmm.
Okay, and Guild, right? This goes to a re-engagement. Okay, I'm gonna flag Mortgage Coach AEs and let them know, and I'm gonna follow up with both of you. I think we have your emails. Cool, and we can and I'll make sure they go over that integration. But also besides that integration, do you think it would be easier for your brands to potentially onboard if it is automatically inside Mortgage Coach?
Yes.
Okay. Okay, I'm gonna take that feedback. Because the thing is, Mortgage Coach was pushing for an internal integration, and it was debated, would that help pick up usage of LoanSense? I mean, we're already putting in the tech work into it, and LoanSense is. I mean, Mortgage Coach as well. Just asking. Cool. I'm gonna follow up. I'm not gonna Dan and Joshua on the Mortgage Coach AE. Melissa, did you have anything Maybe, I don't know if she hears us, but all right. Anything else?
Nope, I'm good over here.
All
Good.
righty. I will be following up. In the meantime, please let us know if you have any additional questions. If you see people with student loans, like, please you could do the estimation and invite them in. Absolutely.
All right, thanks so much.
Happy to help. Thank you so much. Have a
Thank
good
you.
one.
Thank
Bye-bye.
you. Bye.